What is up, guys? I'm gonna do a trade recap for you real quick. Let's zoom out. That's not the right chart. This chart. We took a very clean trade on NQ, and I'm just gonna go through my whole market analysis this morning. So going into the night, last night I was on the charts. I was with a couple guys and we were checking, and this fair value gap right here was kind of the determination of our bias for the day. Now, if we respected it like we did here, and I woke up in the morning and we were still disrespecting it, I would expect us to go lower. But if I woke up in the morning like I did and we disrespected it, I'm expecting price to go higher. Where is price going to go higher? To these equal highs right here. That is my main draw on liquidity, those equal highs. But if you go back and then if you look at the order flow in itself, so you have your SMT, you have your displacement market structure shift, 1 hour market structure shifts right here. You have your rebalance into the 15-minute imbalances, and you go up to the buy side. It's a very clean overall range, and I didn't expect price to go down here at all. A couple guys in the Discord did expect price to go down there. There's a couple reasons why. One is because there's really no true fair value gap. I know on the hourly it looks like it, but if you zoom in even more, there's no true imbalance, like on the 5-minute. Zooming in is how you find the real imbalance and where price is going to bounce. So there's really no true imbalance down there, so there's really no price to revisit. And with price being so close to these buy side and all these equal highs, you expect it to just take them. So as order flow is very bullish going into pre-market, or like going into market open, we're expecting this high right here to get taken. Now when market opens, we get clean manipulation move to the downside in SMT. And now one thing I noted today is we were able to come down and sweep these lows and create SMT while also respecting this fair value gap and then taking the highs, which is very cool because that could have been a turtle soup entry. I'm not a full turtle soup trader. It's not my thing, but there would have been a trade right there for you. But what we took a trade, so we were talking and like patience is the key in trading, and you know that, and I know that. You have to wait for market to tell you what's going to do. I'm waiting all morning to see some type of setup or some sort of thing that I think is valid enough. Now, at the same time, the 4-hour candle, so the 4-hour candle closes at 10 a.m. So does a 1-hour candle. So it's a very volatile range, like a time frame. So there's two ways this was going. So this 4-hour imbalance is what we were watching. So we take these highs, and the candle is like consolidating kind of. So if we disrespect this fair value gap, we can really expect this to go all the way up to here. But if we respect it, we're expecting some volume to push us down a little bit to rebalance, which is exactly what it did, then to potentially go higher or to eventually come down. I don't know yet. We'll have to wait for more structure. But so I'm watching it and I'm looking, and at the same time the candle is shrinking down, respecting this 4-hour imbalance right here. We're creating a market maker sell model on the 1-minute. So this is the only SMT we had, which is all right. It's not bad. You have your higher time frame imbalance right here, your high time frame PD array, 4-hour fair value gap. So you get movement down, you come back up, you respect, okay, I'm getting more bearish. I have to see displacement through a recent swing low. Right here is your displacement through a recent swing low to get a market structure shift. I need to see bearish order flow confirmed. Now, once we do that, we create a fair value gap, this is almost getting to textbook. Now, my candle opens right in that fair value gap, and I'm like, I'm entering. I don't need to see too much more. Now, when you're gonna enter off a non-candle closure, you kind of have to have a more open stop, because I don't know if price is gonna come into the fair value gap, maybe go above it, and then wick it. I don't know. I can't prominently say that because I didn't wait for a candle closure. So my stops were about right here. So it's kind of big stop loss, but it's not. And we'll get rid of this. So I enter right there. I get a very good fill. My fill is right before the 4-hour candle closes. I get a very good fill. We instantly sell off to these lows. But the question is, I had to ask myself, is where's the low-hanging fruit? These lows are the low-hanging fruit right here. And the reason for this is because this is the range. This is the range you're trading. On a 30-second or something along those lines, this would have been the model, the market maker sell model. Now this low, the reason I was targeting this low is just because it was the SMT low and I thought we would go back down there. So what did I do? I took half my position off right here at the low hanging fruit. As you can see, I created this new thing. I think it's pretty sweet. Put a little grapevine, low hanging fruit. But I closed half my position there, and I'm kind of watching order flow. And as we keep selling off, I'm keep trusting. And right around here, I sell half more just as we start to get some rejection. And I have a trailing stop. A trailing stop is very important. There's no need to have a break-even stop loss, which would be all the way up here. Stop. I don't know. Why am I botting out? Where's it say stop? Stop loss. There it is. There's no reason to have a break-even stop loss when you've got this much movement to the downside. So I'm slowly moving it down. We respect this fair value gap. We create another fair value gap right here. My stop is like right here. Now, I know if we disrespect this fair value gap, there's more than likely we're going to go back up. What do? We go back up. So I got out all my position around this area. Earned a nice 0.5%. I'm up on my account. Feels good. This just shows patience is key. It's all about being patient. There's no need to rush into any trades. And if this trade didn't happen today, there's nothing to be mad about that. There's nothing to, you don't need to take a trade every day. It was a no news Monday. I was less confident, not confident. I had less conviction because there's no news, there's not much volatility. I lined up candle closures with the model and you get clean, efficient moves. That is the trade recap for today. I hope you guys enjoyed. If you enjoyed this video, like and subscribe. This was in the live Discord. We discussed it since 8:30 this morning till we took the trade. The Discord is free to join. It's just about getting better in trading the market maker models and ICT concepts and that. If you like this video, please subscribe. It means the world. Yeah, just keep tuning in and have a great day, guys.